Hey traders, Nick Shaheen here. Wanted to review Netflix. Obviously, they reported earnings and they over-delivered on the financial metrics, and more importantly, they over-delivered on the subs. And even more important than that is the guidance. They were very bullish going forward. Okay, so I was not on board with the Netflix picture from the short-term perspective. A while back, I was resistant, let's put it that way, to the upside potential, but I understood the story. The story was they did so well here. They were, first on the market. They cornered the market, and they were cheap enough that they were like a gimme to a lot of people. So I understood the picture, but the thesis for the going forward was the global growth. And that was a carrot. Well, guess what? In this earnings report, it's apparent, in the numbers that carrot is actually here, because now I believe they tipped it to where the global is bigger than the U.S. So it's no longer a carrot. It's right here and right now. So fundamentally, even though the metrics, like from the PE perspective, they're far from being cheap, in fact, they are proud that they're bleeding cash. The cash flow negative, what was it, 4 billion or something like that? Something to make other stocks go gulp. But this is a growth stock. It has it in droves. And when I'm evaluating a growth company, I don't ask it how profitable you are. I ask it what kind of growth you're going to deliver going forward. And if they say, oof, just as much as before and even more, then, hey, I give them a pass on the valuation. This is a trading vehicle for now. It has huge competition either now or later from Disney, Facebook, Apple, Google, Amazon, name it. Everybody's after it. Oh, and not to mention all the other channels that now offer their own streaming versions of whatever they offer on TV. So going forward, it's going to change, and Netflix is right here. It actually probably started to change for everybody, and they have first mover advantage. They have the reach. They have it's almost a generic name. Okay, so having said that, technically this wasn't a surprise. I posted a few charts recently of a potential breakout with these two candles, but they were iffy back and forth. And boy, today, the move was apparent. Let me break in. So they opened, they tried to fade it, but I said don't short it. Boom. Okay, luckily we were long calls, but it was a complete lotto, and now it's clear that actually our target was met. So having said that, going forward, what do? Number one, I don't short it. Number two, I either get on board or I don't. So if I think it's too high for me to chase it now, I don't touch it. There are ways of trading it using options. So buying it outright, you're risking your money right here, right now, with no room to spare. Meaning I'm risking $340, and if it falls, it falls, and if it rallies, I make money. But I can do it via calls. It's a lot cheaper. I'm not putting $340 at stake. I'm buying calls for a fraction of the price of the shares. Okay, mind you, calls have time limit, but if I go out in time plenty, it's still cheaper than buying the shares. Or I can do it a debit call spread, where I buy a call and I sell a call above it. So I'm basically buying a box lottery ticket where I want price to go through both boxes to make money. Through both lines to make money. It's a finite amount of money, but I'm also risking a little amount of money, and I'm still long Netflix. Now I can do it differently. I can sell a put spread, meaning I sell a put to open the risk. That leaves me pretty long Netflix at that price where I sell the put. But I can limit that risk by buying a put below it, thereby making it a credit put spread. Otherwise, some people call it a bull put spread. So basically, you want price to stay above there to make your money. So you collect the money up front, goes into your account. It's not yours to spend it until time ticks out, and it dies for maximum gain, meaning whoever bought it from you loses all their money. They bought a lottery ticket that never came to fruition if Netflix stays above it. It has to be above it even by a penny. So, or if you want to own Netflix at a discount, then you sell a put. And I only sell puts when I want to own a share. Otherwise, I don't. Each contract I sell represents 100 shares. So if I sell a 260 put or 270 put, I'm going to collect $9. So if I go out to September, whatever it is, I haven't looked recently, but if I did, it'd probably be like $6 or $7 for September, 250, 60, something like that. put, meaning if Netflix falls from wherever it is, whoops, sorry about that. If it falls, let's say I do it at 255, 22%, I'm forced to buy it. Meanwhile, I collected $7 or $8, so my break-even point is a lot lower than that. It's whatever, 255, whatever I sell the put, minus the dollar amount I collected, then it's my break-even point. So if price falls through my put that I sold, I'm forced to buy 100 shares per one contract I sold. Not a bad way to get into Netflix. So there are ways to get into Netflix. So I can combine both of these, meaning I sell the puts and I buy a few calls or call spreads. So now I'm long Netflix for free, provided it stays above my sold put. And any premium, even if it's less than what I paid for it, that I collect from that I recover from selling the calls or call spreads, is pure profit. So this is a concept that escapes a lot of people. So I can do calls or debit call spreads. That's one way of going. I can buy the shares. That's the traditional way of going long, but now it's all-time high. And if I go long by a debit call spread or calls, it's a little cheaper, but I'm still making the directional bet. Now I can do a credit put spread, and boy, chat room active. Credit put spread, bull put spread, and collect some money, or sell a put to also collect more money, but a little more aggressively. Or I can do both. Sell the puts or put spreads, divide the calls or call spreads. So if you have any questions about that, let me know. Technically, it's right here on an upside target. So I booked my profit, and I'm debating how I want to go long again. I am still short a few puts, so I'll let those die on the vine or buy them back for cheap. But they're well below current price. So it all depends on the personal portfolio. And I never risk more than I can afford to lose. And more importantly, I never take a trade I don't understand. So if this kind of makes sense, but not really, I wouldn't touch it unless I learn about it. Email me if you need to reach me. Let's see here. On social media, it's RacerNick without a K, or email is sellspreads@gmail.com. Sellspreads@gmail.com. Nick signing out.